Ever wondered why a dollar today buys less than it did a decade ago? Or why gold prices surge when economies wobble? That's the fascinating, yet complex world of inflation at work. Inflation isn't just about the cost of goods rising, it's about the value of your money decreasing over time. Imagine a sneaky thief silently stealing the value of your money. But here's a twist. Inflation can also give a boost to the value of certain investments. Intrigued? Let's dive into it. Think of commodities like gold, oil, and wheat. Their prices don't just depend on supply and demand, they're also intertwined with the complex dance of inflation. You see, commodities can serve as a sort of shield, a hedge against inflation. Now, what does this mean? Well, let's break it down. Inflation, in simple terms, is the rate at which the general level of prices for goods and services is rising. As inflation goes up, the purchasing power of money goes down. That's like your money getting a little weaker each time inflation dances its way up. But here's where commodities step in. When you have commodities, their value doesn't get eroded by inflation. Instead, they often increase in price. That's because these tangible assets, gold, oil, wheat, they retain their inherent value even when the value of money dips. As inflation chips away at the value of money, commodities hold their ground. They are the sturdy ships in the stormy sea of inflation. Now let's talk about commodity stocks. These are shares in companies that produce commodities. When inflation rears its head, it can increase the cost of producing commodities. Everything from machinery to labor gets more expensive. This in turn leads to higher prices for the commodities themselves. But don't be too quick to despair. There's a silver lining here. These higher prices can actually increase the value of commodity stocks. Now, you might be wondering how that works. Well, think of it this way. In times of global economic uncertainty, investors often turn to commodities as a safe haven. This increased demand can drive up their prices even further. So while it may seem counterintuitive, inflation can lead to a rise in the value of commodity stocks. And this is where the importance of understanding the interplay between inflation and commodity stocks comes into play. So, while inflation can be a headache for your wallet, it can be a boon for commodity stocks. You might be thinking, this is all very interesting, but what does it mean for me? Well, let's pull back the curtain and see. Inflation, that pesky rise in the general level of prices, quietly nibbles away at the purchasing power of your money. It's like a stealthy pickpocket, gradually making your hard-earned cash worth less and less. But it's not all doom and gloom. Here's where commodities enter the picture. These tangible assets, whether they're gold, oil, or wheat, can act as a shield against inflation. When inflation rises, the value of commodities often follows suit. It's like they're dancing to the same tune, moving in sync on the dance floor of finance. And what about commodity stocks? Well, just like commodities, they too can rise in value with inflation. This is due to a complex interplay of supply and demand dynamics, increased production costs, and global economic uncertainty. All these factors can make commodity stocks a potentially profitable playground for savvy investors. By understanding these dynamics, you can make more informed decisions about where to put your money. It's about reading the signs, knowing the steps, and having the courage to take the plunge when the time is right. So the next time you hear about inflation on the news, remember its silent impact on your money and its loud effect on commodity stocks. The world of finance is a complex dance, but with every step you understand, you're better equipped for the dance floor.